Good morning friends, this is Yagyadev and I am presenting the economy survey analysis for the Empower IAS Academy. So in previous lectures we studied about the balance and how these things such as barbell strategy and agile framework taken by the government of India in order to create a holistic development framework to boost the economy and to keep the growth as a sustainable level. So in second chapter we studied about how fiscal development are being there managed by various taxes, indirect taxes, and what are the recurring features in terms of various strategies adopted by government of India, how government e-marketplace played a great role, how disinvestment is started in India after first Constitutional Amendment Act 1951 to 1991 era. We all correlated those factors which you should revise again and again for your mains examination as well as prelims. So in the present lecture we will discuss about chapter 3, that is again external sector, which deals with the balance of payment, balance of trade, and how India is doing quite good despite the COVID pandemic and recovering from the lockdown scenario. So we see in the economy survey data that after the induced pandemic of previous year, the foreign exchanges rises and the resilience of India's external sector quite rises, which provided huge impetus to the forex reserve of Reserve Bank of India, which again made the balance of payment surplus. So in this we see that net international investment position quite recovering after the post-pandemic period, and the recovery was taken to a new leap after the post-pandemic period by providing more and more sustainable development modules. And it is the definition says that it is the total difference between the financial assets of residents of a country to the external people who are living outside the country. So and it represents the net claim or net liability to the rest of world with respect to Indian population. So keep it in mind. Next is taper tantrum. So we wrote here USA subprime crisis. As you see, taper tantrum was a phenomena in which the emerging economies felt real slide back after 2007 subprime crisis, which led to the mortgage crisis and the creation of synthetic collateral debt obligations, which led to fall of US economy. Due to the impact of fall of United States economy, the emerging market economy such as Afghanistan, Iran, Iraq, all the Arabian nations, all the African nations, as well as many Asian nations also faced the crisis. So this was called as a taper tantrum, in which US Fed started to put brakes on the quantitative easing programs. Remember it, quantitative easing programs को US Federal Reserve ने काफ़ी कम कर दिया. It started reducing the liquidity from the market. Now invisibles in economy. What are the invisibles? That are services provided throughout the economy. It is a part of balance of payment, which we will look into the next slide, and it provides the services, products that do not result into transfer of physical objects such as online services, online IT services, and internet services of various kind. It includes consulting services, shipping services, and tourism, patent license revenues, and so on. Now the next, what is balance of payment exactly? It is highly asked in UPSC prelims as well as mains questions. So balance of payment comprises of two parts, friends. First is the current account deficit and second is capital account. So current account comprises of visibles. Those are visible in nature, such as crude oil, cars, mobiles, computers, gold, silver, jewelry. So these are part of visibles. The next is invisible. What is invisible? Which are not visible in nature, which we cannot see or touch, such as services, which we are dealing in terms of IT services, BPO, KPO, and many other services such as tourism, and online services. Now it also comprises of incomes in terms of profits from various kind of investments, and interest from any kind of fund and dividend. Then it also comprises of transfers. So transfers mainly comprise of remittances which we get from the various investors in terms of various donations, in terms of gifts, in terms of grants, and so on. These are parts of invisible. And there is a capital account which makes the economy boost. So the capital account of India was very strong during the pandemic due to high availability of FDI, that is foreign direct investment, which is a capital invested by foreign entities in other market in terms of creating a manufacturing unit. So we saw Tesla created its manufacturing unit in India, another Adani, another sectors such as ports, shipping, SEZ were created during the lockdown situation. That is very important, and it raised the foreign direct investment. Again FII, that is foreign institutional investment. It means that the institutional investors are taking the shares in the market, and they are investing lots in terms of pumping the money as well as liquidity. Then there is loans taken by the government in terms of external commercial borrowings, that is external commercial borrowing. And there are receipts which are taken by government. So it is a huge bulk of India which are having in terms of receipts as well as the capital which constitute the total government external commercial borrowing. Then there is bank assets. Bank assets comprises of NRI deposits, forex, then bonds, then all the banking capitals taken by the RBI as well as other commercial banks of India, which were very high. So forex was already $634 billion, which was a very high presence in the Indian market, which pushes the confidence of India after three economies such as China, Switzerland and Japan. So India was at 4th position. So the balance of payment comprises of these factors of visible, invisible in terms of current account, and investment, loan and banking assets in terms of capital account. Remember for your prelims as well as mains point of view. Now what is balance of trade? It is a net difference between import and export, friends. What are the things that are being imported from various countries such as pulses, software devices, plastics, semiconductor, lithium, aluminium and so on. So these are constituted under the balance of trade. So it is very important for your UPSC point of view, and it creates the trade deficit in lockdown period. We will see in the next slide. So this again creates a mind map for your people. I make it very simple and very composite for you to understand. So balance of payment comprises of balance of trade. Just be with me, listen very carefully, try to understand and revise with me. Okay, so balance of trade comprising of surplus in fund of money or capital, and it also leads to import and export that are taken by the countries in various kinds of transactions. Then there is balance of trade deficit, again which is in the form of import and export. When the value of import is higher than the export, when the value of imports is higher than the export, then it leads to when I is greater than E, it is called as balance of trade deficit. When E is greater than I, that is exports are greater than imports, it leads to balance of trade surplus. India has CAD plus reserves, that is in part of capital account deficit plus reserve, which adds the balance surplus. Both visible and invisible also present. So capital account was very high due to these factors. Then again, international reserve account comprising in the balance of payment. In India, we have huge forex reserve during this pandemic. After 1991, forex reserve again increasing. Now balance of payment surplus, which is in terms of higher receipts than expenditures. So we have higher value of receipts than expenditure. So if receipts are higher than expenditure, that means we are having a balance of payment surplus. When capital and current receipts both are higher than expenditure, then we are having again balance of payment surplus. Now balance of payment crisis. Remember when crisis occurs in balance of payment? When there is more exports, which things which we are producing throughout our fiscal year, throughout our industries, when we are exporting all these goods, then the exports is higher, and when the exports are higher, then there is BOP crisis. Reduced imports. When the imports are reduced, such as when there is a requirement of semiconductor devices, we are lagging in semiconductor in production of electronics. Therefore, we lag in the imports, again leads to BOP crisis. Then attract capital. When there is BOP crisis, there is less capital investment, and further it leads to devaluation of currency and devaluation of economy. Now the next part, the BOP when there is current account. In terms of current account, friends, there are two factors: short term, which are visibles, exports and import, and taxes. Another are receipts in forms of exports, in forms of interest income, and in form of inward remittances. That leads to current account. Then there is expenditure, which leads to imports and interest payment and outward remittances. This again shows the good health of balance of payment surplus due to current account surplus. Now there is capital account in form of long-term capital, which are invisibles. What are invisibles? Services, IT sector, BPO, so on and so forth. Then there are receipts in the form of foreign loans which are taken by the government in terms of various bonds, T-bills, and so on. And there are also foreign investments in making receipts. Then there is again expenditure, which makes the loans granted by us to other nations. The loans which are taken by the government of India for its expenditure and various development programs, that come under the expenditure methods. Then last but not the least is investment made by our nationals in other nations. So what investment government of India makes in terms of development of neighboring nations such as Sri Lanka, Maldives, Cambodia, and Iran, Iraq, in terms of ports, SEZs, and other projects. So these come under the expenditure. So this is a complete mind map you must remember for your prelims as well as main point of view, as it is easy to revise and memorize it. Okay, please memorize it. Now coming to the next. So external trade was seemed to be little low in the first phase of lockdown in 2019-20, but as the economy survey says that after the recovery, where there was a strong capital flow into India, after the post-pandemic situation, there was a strong capital flow in India, leading to a rapid accumulation of foreign exchange reserve, which leads to high forex in India, and which again makes balance of payment surplus. However, the downside risk may pose challenges for India during 22-23. Still, there is a risk forecasted by the economists during 2022 and 2023 period due to the slumps in the market. Why this is so? So these are alerts for Indian investors that are global liquidity tightening. So global investors are nowadays having less provisions to invest in other countries, especially which are prone to the COVID situation. That is why government is propelling more and more vaccination programs and security for vulnerable sections in forms of various schemes that we studied in the barbell strategy. Then next is the continued volatility of global commodity prices. There is constant volatility in global commodities where the goods and services are being stopped in the eurozone. Then many of the goods are not taken by China, so US-China crisis is there, Russia-Ukraine crisis is there, so still such volatility continues. Then third is high freight cost. There is railway transportation cost being very high, which government looks into the improvement of the transportation by making of PM Gati Shakti program. Then fourth is the fresh resurgence of COVID-19 in terms of Omicron variant. ओमिक्रॉन वेरिएंट के रूप में कोविड का फिर से नए रूप में आ जाना अगेन लीड्स टू डिस्ट्रक्शन ऑफ द एक्सपेंडिचर्स एंड threat to the foreign exchange reserve. Now next